Good morning, and thanks for joining us today. I'm Carlos Phillips, President and CEO of the Greenville Chamber. We host these community matters discussions to connect you with local, state, and national leaders. You can find past recordings as well as the upcoming Community Matters schedule at greenvillechamber.org. I want to remind you to please mute your microphones and turn off your cameras. You can submit questions through our chat feature. We have a lot to talk about today, and we want today's conversation to be interactive. So please use that chat feature. Today, we're talking about the latest round of PPP. Let's kick things off this way. If you're a business owner who participated in the first round of PPP, please share if you have or will be applying for the new round of PPP in our chat. That's just to get things going today. To guide us through this important discussion, we are joined by three experts. Tammie Hawkins, CEO of CommunityWorks, Earl Gregorich, Area Manager and Business Consultant of Greenville Area Small Business Development Center, and Cal Hurst, Executive Vice President and Chief Banking Officer of Southern First Bank. And I must also say, he is the treasurer for the Greenville Chamber Board of Directors. I want to welcome each of our three guests here today. Good morning.
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 All right, Earl, we're going to start things off with you this morning. Can you provide us with a high-level overview of this latest round of PPP? What's similar from the previous round, and what are some of the key differences?
Sure. So there are some new twists to the PPP second round, and it mainly falls into a few categories. The taxability of the second round is much more tax friendly. There's no taxable funds when you receive funds. If it's forgiven, that is not a taxable income situation. The expenses that you are paying with the proceeds from the PPP loans are now tax deductible. They originally were not set up to be that way. You have a wider range of acceptable expenses that you can use the funds for, and those fall into multiple categories. We have operating expenses that you can use them for, such as business software, cloud computing, HR and accounting expenses that are related to operations, things of that nature. You can also use them for supplier costs. So if you're making payments to suppliers for goods that are essential to your operations, whether that was PPP or perishable goods, those are acceptable expenses now. You can pay for PPE, the protective equipment or gear that you've been using for your employees or your customers. You can also pay for property damage that you may have incurred during some of the public disturbances that occurred, but those have to be things that were not covered in insurance. You also do not have to include the idle advance as a reduction in your PPP loan when asking for forgiveness. They've eliminated that requirement. They've simplified the forgiveness program, $150,000 and less, and a one-page application. So that's been simplified this time around. We have 501c6s now eligible for PPP, which a lot of our chamber folks are happy to see that. I know that. So we got that going. And we also have a new specialized multiplier for those who are in the hospitality industry. So if you have a NAICS code that begins with 72, you can now have a multiplier of 3.5 times your average monthly payroll rather than the 2.5 that it was across the board for all applicants last time. The last thing that's different is the qualifications for the loan, where there weren't quite as many qualifications the first time around. They've added some additional qualifications to kind of narrow the scope and point the PPP program towards smaller of the small businesses. So at this point, you had to have been in business as of February 15th, 2020. You had to have 300 or less employees. You also had to show a reduction in revenues for one quarter 2020 versus 2019. And you must have received and also exhausted the funds of your first draw PPP loan to qualify. So those are just some of the comparisons and contrasts of the first draw and second draw.
Thanks for sharing that, Earl. It sounds like a more accommodating program now versus the original PPP. Is that fair to say?
I think so. We're seeing the system, the process anyway, seems to be going a lot smoother this time. And those that qualify are really pleased with the way things are going.
Good. That's good news. That is good news. Tammie, can you tell us a little more about the SBA relief side and what you're seeing?
Absolutely. So again, Earl kind of laid out the qualifications, and as a community development financial institution, we were, the portal was open for us first. The goal of that was to try to help some of those smaller minority businesses, really focusing on some of the harder hit businesses that we work with here at CommunityWorks. So we had about the first week to do initial processing. As Earl said, it's a lot more flexible. I would say the biggest challenge continues to be the documentation and individuals having the accurate documentation, not only their payroll documentation, but now they have to do that comparison from 2019 to 2020 and showing that 25% loss. And so again, it's taking folks a little bit of time to pull those things together to apply. The other thing that we have heard with some of our nonprofit organizations, for example, because nonprofits were eligible, is the fact that they are showing actually more revenue if they were a recipient of COVID relief funding. So not PPP per se, or not EIDL, but let's say they are a direct service provider and they raised some money to do a feeding program or rental assistance program or things like that. In many cases, they may show that they actually earned more, although it's sort of not accurate, right? They were receiving funding. United Way, for example, may have received funding to do direct services that they wouldn't know. So, and that's not necessarily something that we can address right now. It's not currently in the legislation, although we're trying to talk to folks about if there's a rule change that could impact those folks as well. And again, I would say SBA is taking a little bit longer to review from our end. I don't know, and Cal can speak from the banking end. And I think they're taking a little bit more scrutiny on what's being submitted. The other thing I would say is I think people are a little bit hesitant if they haven't had their previous PPP loan forgiven in applying for the second draw, or for even those that may have not applied for PPP, hearing that folks are not getting their loans forgiven. SBA is auditing. So I will tell you here at CommunityWorks, Carlos, you know, we did about 200 loans and most of our loans were average $12,000 and below. Our smallest loan was $600 for just a musician who teaches music to kids. And several have been pulled and audited by SBA. And so again, documentation is essential, is what I would reiterate, whether it be the last round or this round, because the SBA is looking at those files. So just a little bit of tidbit of information there.
Good, thank you. And what sort of volume have you seen, Tammie, in this round versus the first?
Yeah, thanks for asking that. Yeah, so initially, as you know, when it first rolled out, I mean, the money was gone in a few days and we were all scrambling, especially us smaller CDFIs that were also in the same round as the banks. Were concerned about getting our clients access to PPP. But it's the way they did it this time, they did stagger it. So they allowed us to go first, and then the week later, they allowed the larger institutions to open up their portal. But it really has been a lot slower. There hasn't been the rush like we saw. We've processed probably 40 or so in the past month. A lot of those are still pending. Some of them are approved. So again, we're seeing a little bit slower. And I think it's the hesitation with some of the things that we've mentioned and Earl mentioned as well.
Got it. Thank you. Cal, how are things looking over at Southern First Bank from a PPP perspective?
Yeah, thanks, Carlos. Morning, everybody. Similar to what Tammie just mentioned, we've seen a bit slower uptake in this case, and I think for all the reasons that you've heard so far. We felt at the outset of this round that we might see something along the lines of, I don't know, 25 to 50% of the volume that we saw in round one. And so far we're at about 30 to 35%. So it's actually, it's trending about like we might have expected, which included an expectation that it would be slower this round and fewer applicants for the reasons that we've heard. Also, like Tammie mentioned, we've noticed the SBA is taking, I would say, significantly longer in reviewing this round of applications before decisioning them. And only now is the mechanism to fund those loans really getting up to speed. And I've seen that in both cases, both times with PPP. It takes everybody a bit of time to, whether it's us getting our systems in place, or our underwriting process in place, to the SBA being able to start handling increasing volume, and then to the funding side. So we're seeing that same progression take place now, where our systems, and I say ours as the banking industry, really, they take some time to integrate all the new rules, get that set up, and make it so that applicants can then go through the process. Then there's a revised underwriting process that happens based on the new rules and the criteria. And then the SBA has its own, and that's just getting up to speed. So a slower process, but it's turned out okay, I think, so far, Carlos, because again, the volume isn't such that it's really straining the system from a dollars or a capacity standpoint. I think as of 4 or 5 days ago, I think about 73 billion of the total allocation of loans for this round had been, I think, approved by the SBA at that point, not necessarily funded. So there's still time, I guess, is the point. And so it's frustrating, I think, for a lot of people, because we want to get it through the system. I think certainly any bank's clients want to know they're approved and going to be funded, given the strains that they're feeling in their business. And so that can be a really tenuous process, but it's been a little slower this round, as we expected. And then I think on the SBA side is probably where we've seen the biggest change in the amount of scrutiny that we're seeing from them.
Yeah, thanks for sharing that, Cal. You know, the first thoughts I have when I hear that the volume is lower versus the first round is that the need is not there. Is that, is it fair for me to think that way?
I'll jump in real quick on this too. And Cal, you probably have something to add. I would say, there has been some grant funding. So if we think about our state, we know that Greenville County received CARES funding directly. A lot of small businesses tapped into that resource. We had a push for hospitality industry there at the end, where we had the hospitality grant with the county. As you know, the state had a grant fund. I think folks are still looking for those grant resources, and when they can tap into those, that they're choosing those over probably a federal program, which I could understand why, with some of the rules that are changing. I mean, we're seeing a little bit of that because people that are calling are saying, is this going to be forgiven? Is this a grant? Whether it be the second round of PPP, how has it changed that it's not going to be a loan? As you know, if it's not forgiven, Carlos, it's still a loan. Now it's a 1% loan, and it's a very favorable loan, but a lot of people are really concerned about it becoming a loan.
Yeah, I'll add one thing there. I think Tammie's exactly right. I think those who have needs, there have proven to be a number of sources, and I agree. I think wisely, those who have needs are exploring those sources or have received funding that have tied them over for a little longer. I think the other thing that's happened as it relates to need is that, if we recall, and I know we all do, when this was first rolled out in last April, there was a combination of the most uncertainty maybe we could possibly imagine about what this would mean ultimately for any one business, combined with the fact that almost all of those businesses couldn't open their doors. And so the need was almost universal. In fact, I'm not sure anyone could have imagined a total amount that would to send through PPP that would have actually met the need. I mean, as I said, the need was almost universal. If I own a business and I can't open my doors, and I have no idea what the next 3 days are going to bring, let alone the next 9 months, there's unlimited need. What's happened since is there's some combination of need and ongoing need for those businesses that have really been impacted for the longest period of time, along with a realization for some businesses, industries we could probably rattle off, where, okay, we're actually back to somewhat normal. Some industries have even increased based on demand for their products and services. Some industries have really been hit hard, and those are the ones I think this is targeted for. And so we've seen that a lot of people who might be willing to do the calculation on their own to say, do I even qualify for this round, have just stopped there and said, it's not even worth the hour I'm going to spend on that, because I don't trust that the government's not going to ask me to certify that things are terrible. And the fact is they're not for those particular businesses. But undoubtedly, there are those whose needs are ongoing. I do think it's just, it's a subset, whether that be 50% of all the businesses or, 75%, time will tell, but there's a subset that the need continues, but by volume, it is less for those reasons.
Yeah, I would say that if we could point to anything good that has come out of this, it's the fact that small business owners that have been able to adjust and make things work are approaching things in a much more educated and strategic fashion. It was quite evident before COVID, and now when these programs rolled out, that many of our small business owners were not as financially savvy as we would like. They didn't keep financial records as well as we would like, and they've found the value in that now. And they've actually taught themselves over this period of time on how to use those in a strategic manner and make these kinds of decisions. So yeah, I second that. You've got people out there that they know what they need and what they want and how that's going to impact the business, rather than just running out there for anything and everything they can grab their hands onto.
Got it. Earl, you make an excellent point on the improved documentation. And that leads us into a conversation about eligible expenses. What changes have been made in the second rollout regarding eligible expenses? There seems to be more that is eligible through this program.
Yeah, the good news is that gives you some flexibility with regards to applying for forgiveness when that time comes. But the general mix of expenses is still the same. You still have to show that you've spent 60% of your PPP loan on payroll and the other 40% on the approved expenses. The initial round of PPP limited tremendously that 40% to just a very few categories. Where this second application, as I mentioned earlier, you've got operating expenses, supplier costs, all those types of things that you can use it on. But the key there is make sure you can back that up with the documentation. We are advising our clients, if at all possible, if you can get to that 100% used on payroll position when you're applying for forgiveness, by all means do that, because it's going to save you a ton of tracking down to the paperwork and maintaining that paperwork, because you don't just grab it and prove that you used it. You have to maintain that for the next 4 years. You have to keep that in a file somewhere. So in the event of an audit, you can pull that back out. So that's a challenge for a lot of our small business owners to maintain that level of documentation.
Well, I guess the important thing is, the smaller businesses, any business should be documenting those things anyway, just as a good business practice. So whether it was for the PPP or otherwise, but certainly need to step up their efforts in that regard. Thank you for that, Earl. All right, Tammie, and or Cal, are there incentives on existing SBA programs for startups or expansions?
So one other option for businesses, if PPP doesn't seem, I mean, they can go for EPPP as well, but if PPP doesn't seem like a route, or it's they've already tapped into it, SBA did extend the SBA Relief Fund program, which if you're an existing SBA borrower, whether that be with Cal or myself, depending on the type of loan you have, a 504 or a micro loan, the SBA is going to pay your payments for 6 months, and in some cases up to 8 months. So that's a great way for existing borrowers to get relief now. So that's a really wonderful opportunity. In addition, you can actually get a new SBA loan. So in many cases, Cal and Earl were just talking about, 60% of the PPP funding goes toward payroll. But what if there's other working capital expenses that you need to pay for, and PPP won't cover it, or other resources won't cover it? You could actually apply for an SBA loan. You still have to do the same due diligence as if you were applying normally. But again, you receive that same benefit where SBA will be paying those payments. So basically, you're not paying payments for between 6 to 8 months, depending on the business. So it's another opportunity for businesses to access relief through that program. Cal or Earl may have others to add to that. But
I probably would have asked Tammie that question myself, just because she has a lot of insight into that and works with a lot of businesses who probably more than I do, who have existing SBA loans. I would also just say SBA in general has always provided great financing options for people. Carlos, I think you mentioned startups and expansions, and that's in my career. Those are areas where via at times just by being the banker involved, we've been able to put the deal together, and at other times we've relied on SBA involvement through just basic standard programs that they have that are geared towards those types of situations. So it's a little bit business by business, and I'm not aware. I get it for as it relates to the current programs. I think Tammie hit on the main ones that I'm aware of.
Yeah,
Thank you all. I'm sorry. Go ahead, Earl.
I was just going to say, I was talking to my advisory board this morning, and we have a few different lenders on that advisory board. One of them mentioned the fact that they had a $2 million loan go through, and it was going to save the borrower something like $45,000 in fees and all those things that they normally would have had to come out of pocket with. So yeah, if you're looking to get quote unquote new money for your business right now, you can't ask for better terms on an SBA backed loan. This would be the time to look into it if you're going to do it.
Yeah, absolutely. And I'll just add, I mean, it could be as much as $9,000 a month that the SBA is paying on your loan. So it could be a $50,000 loan, or as Earl said, it could be a $2 million loan. It just can't go exceed $9,000 per month. So it's a great opportunity for folks that would underwrite well anyways, would need this working capital anyways, or need to do some expansion anyways. And so I think it is an opportunity, a unique opportunity right now to tap into that program.
Yeah, but you got to do it before September 30th.
Yeah.
You got to close on the loan before September 30th.
All right. You all got me thinking over here. All right. Earl, I got a question that may be considered a dreaded question here. And that is, what if a business does not meet the criteria for forgiveness of their PPP loan? What happens in that situation?
Well, as much doom and despair as you might think would go with that, it's not actually that bad. As we were just saying, it's great terms on these programs. So if someone does not meet forgiveness, first and foremost, it's not just 100% you're forgiven or not. There is a stair step, so to speak, into forgiveness. So if you miss it's that 60-40 split on that forgiveness ratio by 10%. Well, your forgiveness is reduced by that 10%. So it's not an all or none situation, I guess is what I'm saying. So making sure that you can have the records and get that together. Then when this converts, it'll convert to a loan. If you're not forgiven for whatever amount you're not forgiven, it'll convert to a loan. That the loan terms on that are 1% on the note. 5 years is the payoff on it, and you get a 10-month deferral on the payments. So extremely friendly conversion on that note, and we're finding anybody that hasn't met all of the forgiveness, and frankly, I can probably count on one hand the number of clients that did not get everything forgiven at this point. It's been very friendly to them.
Good. We actually have a question from our chat room, and you may have covered some of this already, Earl, but what is the calculation for the PPP loan? I think you talked about the 1 month's payroll times 2.5 for businesses. And then I think for another group, it was 1 month's payroll times 3.5. I think it was for restaurants and things like that. Is it that simple? Is it that simple of a calculation?
For the most part, yes. Probably the most tricky part of the calculation is coming up with that average monthly payroll. Because there's so many different scenarios. You've got folks who don't have payroll, right? They're a single person owner of a business. So what am I looking at? I don't have payroll. You've got folks that do have formal payroll. You've got folks that have themselves on a draw and other people on payroll. How does that work? So figuring out what that 1 month's payroll is usually the most difficult part of the equation. And then it's the 2.5 times the average for anybody who's not in the hospitality the category, and then 3.5 times that if you fall into that NAICS code of 72.
Yeah, and I'll add, that's a great point, Earl. I mean, I think sole proprietors, we had a lot of sole proprietors that we worked with, and most folks are using their Schedule C, obviously, because if they're a sole proprietor or if they're an LLC, we're really encouraging folks to, if they do get PPP, put that in your business account, not your personal account. Again, kind of education. Sometimes we know we have one bank account as a sole proprietor. And then make sure you pay yourself and just pay yourself weekly. Again, it can be a little bit different, if you're a sole proprietor than a normal 941 kind of employee report. And those are some of the things that we've seen and making sure folks have that documentation proving that they paid themselves as part of that effort.
And make sure that pay is kind of in line with what you were getting before. Don't give yourself a $5,000 raise per month because you can't alone. That's not going to hold well in an audit situation.
Wise counsel there, Earl. Thank you. Thank you for that. Another several questions in the chat. See if we can dissect this. On the forgiveness front, will the FTE reduction still be considered?
Yes.
All right, Earl nodded yes. What is the time frame of comparison?
8 to 24 weeks.
All right, thank you, Earl. You are on a roll, my friend. What if you have employees that leave for reasons other than being furloughed?
They can. Yeah, go ahead, Earl.
No, go ahead.
I was just going to say, we've had those questions before. People have changed jobs. People have left jobs, made different decisions in their life. They want to stay home with the kids. So you do have to replace that employee or show that employee as well. So it doesn't have to be the same exact employee in terms of it's not about the number of jobs available during that time frame. But you may have some additional guidance, Earl, but that's sort of what we've been sharing with our clients.
Yeah, so there's some exceptions that may be able to justify a few positions. You're not going to be able to justify away a 20 person drop in FTE. But if you've got 2 or 3 people that have legitimate reasons for moving on, or you had legitimate reasons for not fulfilling or refilling that position, just make sure you have it fully documented as to when the person left, why they left, if at all possible, have that person write a note, something saying this is what I did and why I did it, so that you're not on the hook per se to prove that that's what actually happened. That's not to say it's always going to be approved, but at least you have documentation to fight that fight if it comes down to it.
Got it. And I'm going to assume that the answer to this last question is yes, but I am not a subject matter expert, so I'm going to ask anyway. Can payroll be 100% of the qualifying expenses? And I think you said yes earlier, but.
Yep.
Okay, good. Thank you for that. And if for folks on the call, if you have other questions, please ask those via the chat. We'd love to get to those. Cal, why is it important that businesses go to the same banking partner or lender where they applied during the first round?
Well, I think a couple of things we've noticed. Number one, it's in almost every case, there is a lot of information from round one that can just sort of port over for round two. It's even if you have to enter it again into an application with the same lender, it at least creates a pretty consistent record of information through both processes for those who receive funding in round one as well. So for several reasons, I would just say, broadly speaking, it has gone smoother, and it does go smoother when you apply with the same lender in round two as you receive funding with in round one. We have seen instances, Carlos, where for any number of reasons, well, I'll put it this way, we have that conversation generally. If somebody approaches us and says, look, I'd like to apply with you all for round two, we're trying to help them make a determination. Is that actually going to solve whatever the problem is that they're trying to solve related to why they're not going through the same lender as round one? Is it a didn't hear back from them in a timely fashion, or is it a we've changed banks since then, lost our bank rep, or they've gotten out of the business of doing PPP altogether? I mean, there's some that are more obvious than others. But we've tried to at least have that conversation with people to say, if you're going to change, let's ensure, at least as best we can, that is going to solve the problem you actually have. And there are some where that makes sense. And there are others where we've said to people, actually, we think it's probably worth you applying through the same bank, and let's just see how it goes. And if we wind up, 3 weeks, 4 weeks into the process and nothing's happened, then maybe you back up and try something different, as frustrating as that can be. But we've seen by and large that the process just runs smoother, whether because of data consistency or knowing what to expect or commonality between who's handling something for you as a borrower. We've seen that process run more smoothly when people apply through the same lender.
And we learned from the first round of PPP the value and the priority on having a good, solid relationship with your financial institution.
Yep.
That's fairly important, right?
Yeah, no doubt. I think any bank coming into this would have said you need to have a relationship with a bank, and that sounds self-serving. But also, any bank would have said the reason you need a relationship with a banker, we would say a banker, or at least you need to have an established relationship with a bank, is because there's going to come someday when the chips are down. And you're going to need somebody who knows the story, knows you know where to find them, they know where to find you. None of us would have had a crystal ball enough to say, and that day is going to look like a pandemic and a brand new loan program that was conceived and invented and rolled out in less than 30 days and included trillions of dollars, et cetera. But this is one of those days, and there are others. through any business's life cycle, there are hopefully an enormous number of great days and a limited number of ones where you just need to have a relationship to lean on when the chips are down to say, I need this and I need our relationship to matter. And to some extent, PPP is a bit of an interesting case study for that, because there's only so much that's within any borrower or bank's control. Ultimately, the SBA runs the show. And by that, I mean everything from scrutiny on the front end to approving the fact whether you get a loan or not, to approving the fact of whether it's forgiven or not, and then deciding whether they audit that forgiveness or not. And so we're all playing a little bit of a pass-through game here at times, but we've certainly found that it has mattered that borrowers, clients know who to call. Even if the update is we're waiting on the SBA, that's a lot better than being in a black hole with somebody that you've never spoken to before.
And I would just add, Carlos, in addition to having that banking relationship, I think what we've learned, and Earl touched on this earlier, is having a good accounting firm or someone that you can rely on, whether it's the SBDC through their coaching and support, or it's CommunityWorks through our Women's Business Center to understand financials. Or again, we saw a lot of folks that didn't qualify for PPP because of the way the accounting was done for them, whether they be a Schedule C and they showed a loss versus a gain. And again, I think folks were really, their eyes were open, not only to, having a good banking relationship to apply for these types of opportunities, but also making sure that their books are in order and that they're prepared for situations like this, and have good advice and good guidance to enable them to do that. So that was another thing that we really learned. I think we knew some of that, but it was really eye-opening to see how many folks were not prepared and did not have the documentation necessary to enable them to access these resources.
Yeah, it was very difficult, and still is very difficult, being this deep into the coordination of these programs, to get phone calls. It's very difficult not to say I told you so, because the third thing that we tell every business that comes through our door from a foundational building standpoint is establish a business bank account. And the reason it's third is because you need the first two steps to establish the account. So it is that important. And then, the financial projections and the financial aspect of it, those are things we do day in and day out with every business that we work with at the SBDC. So yeah, it's frustrating from our standpoint to get a client that's been with you for, a long time, call up and say, hey, I don't have a bank. What's this income statement thing they're asking me about? That's frustrating. So we have, I think, raised the bar and gotten a lot of awareness in our small business community of just how important those things are now.
Good. Thank you all for sharing that counsel with our listeners today. So Earl, this program and funds won't be available forever. Will not go into perpetuity. What are some key dates that folks need to keep in mind?
Well, for certain, the PPP program, March 31st, that's the deadline. Provided we don't run out of funds before that, but I have not heard any rumblings that that's going to happen at this point. The other thing is, there's other programs that will continue. The Economic Injury Disaster Loan Program has been in force and will continue in force beyond the March 1st. I think it's end of year before that one expires. There's other programs like the Employment Retention Tax Credit Program that comes into play. There's several other things that all fall under this stimulus umbrella that have different expirations. So just because we say PPP will end March 31st doesn't mean there won't be some additional support mechanisms out there. So my advice is stay in tune with your banker, stay in tune with the SBDC as these things come down, as the changes occur. We can give you a much better way of tapping into those and rolling with those punches.
Good. Tammie, Earl, and Cal, any Any closing thoughts for today's call?
Well, I would just say one of the things I would advise, and in particular, Carlos, for the chamber and the chamber members, if there are things about these programs that are not working, and we know that some of them are out of our control, as Cal mentioned, but as you know, 50, C6s were not eligible the last time, but they heard from the community, they heard from advocacy efforts like yourself of why it was important for chambers to be included in additional stimulus funding. I would say now is the time to start collecting those questions, like this conversation about nonprofits getting COVID relief money and that being counted against them. We start to collect some of those things so we can share that with our congressional folks as we think about another stimulus package or this possibly Earl being extended. We know PPP was extended the last time, so that we can respond to some of those barriers that we might be seeing with businesses. And so that would be just one kind of final thought as we think about the ongoing resource.
Thank you, Tammie. Earl, Cal?
No, nothing big for me, Carlos. This has been, I know we're all learning together. I say that a lot to our clients, and we as a bank, yes, the SBA is pulling a lot of strings, but we take, I think all banks and all bankers take very seriously the fact that there are people who need these funds, and the program is designed such that we play a distributor's role in those funds. And so I want to encourage people to lean on any resources you have. There are such a huge number of people who are sympathetic to the fact that businesses need this money because they want to take care of their employees and they want to stay open. And we are all 100% invested in that idea for every one of our clients and everyone in our community. So just know we take this very seriously. We feel it along with you, and we're in this to make sure that people get what they need to whatever is the extent of our ability to make that happen.
Yeah, no small business really should feel like they're fighting this battle alone. The support network that is out there, the resources that are available, it's just tremendous. The SBDC team, I say it a lot, and when I get in front of folks and I stand behind it, there is not a business challenge that you can come up with that you could even fabricate in your mind that the SBDC network could not address. So if you'd like to challenge me on that, I welcome the phone call, because we have some really smart people. If it's not something I can help you with, we've got 50 other of me running around the state and 1,000 offices across the United States. So be sure to reach out to us, not just for PPP stuff, but anything and everything you might have as a challenge. And we work closely with Greenville Chamber and a lot of the other area resources. So we're your best first phone call. We don't cost you a thing.
Well, that is good to know, Earl. I want to thank you, Tammie and Cal, for joining us on today's call and sharing such great information. I learned a bit more than I thought I would from today's call, and I think our participants did as well. So again, thank you for joining, and thanks for all that you're doing to make sure that businesses remain open. And it's what you're doing is a great service to our community. I want to remind folks on the call, first of all, I want to thank everybody for joining us today. A recording of today's call will be shared on the Greenville Chamber's website and sent to attendees along with a survey. Please complete that survey. It does inform our future programming, so please complete that survey. And want to take the time at the end of this call to remind everyone to please continue to do your part to stop the spread of the coronavirus. We all know by now the importance of masking, washing, and distancing. So let's continue to do that. It is my prayer that this is the last Zoom call that we have to have about small business, about assistance that's COVID related. And one way that we can restore economic health is by becoming a bit more healthy individually. So we got to do our part. In parting, I would like to encourage everyone to stay positive, and test negative. Thanks again for joining us today. Have a great week.